Good afternoon, and welcome to Farm Focus for Thursday, December 5th. Corn and bean prices finished a little bit lower today, with wheat seeing some more significant losses. Export sales came in well below the totals seen over recent weeks. That was a negative for the markets and pushed grain prices lower today. March corn futures finished 3 cents lower at 4.34. July corn futures down 3 cents at 4.49. January soybeans down 2 cents at 13.28. July soybeans up 2 cents at 12.90. Kansas City March wheat was down 9 cents at 6.95. Minneapolis March wheat down 8 cents at 6.84. Outside markets for the most part were relatively quiet today, mixed as well. Crude oil currently 20 cents a barrel higher at 97.40. Ethanol up 2 cents per gallon at $1.70. The gold market down $16 an ounce at $1,232. The U.S. dollar index down 36 points at 80.27. And the stock market is currently 46 points lower, with the Dow Jones trading at 15,844. Livestock markets were lower today, with February live cattle down $1.40 at 133.03. January feeder cattle down 65 cents at 164.40. And February hogs down 25 cents at 88.75. Taking a look at news items today, the general theme for the grain markets remains one of choppy, range-bound trade. Prices of corn and soybeans traded on both sides of unchanged today. Prices remain choppy as well from a day-to-day, up one day, down the next. This pattern could continue into next Tuesday when the USDA will release its December crop report, and that could provide some surprises that may establish somewhat of a trend. Until then, we expect more choppy trade. Demand for U.S. grains does remain very good. Corn demand for ethanol and soybean demand from crushers is good. Livestock production is generally profitable, with prices down significantly from last year, and that keeps livestock demand solid as well. Export demand has been very good since the new crop harvest began, but there are some concerns that export demand may start to back off, especially due to some concerns in China. USDA released its weekly export sales report this morning. Let's take a look at the corn export sales. The number came in at 594,000 metric tons. Now that is over double the 239,000 tons that's needed weekly to reach USDA's forecast, but it continues a general trend of sharply lower exports over the last month. Corn exports did come in at the lower end of trade expectations, and it was seen as a negative factor for corn prices today. The weekly soybean export sales number came in at 805,000 tons. That is the lowest number seen this marketing year, but it's still well above the 47,000 tons that's needed weekly to reach USDA's annual forecast. At this point, we have nearly reached the USDA's annual sales total already, with 9 months to go in the marketing year. But the marketplace seems to be a little bit concerned regarding the trend in export sales. This was the lowest weekly export sales total of this marketing year, and the general trend on U.S. export sales, which was very, very strong early in the year, is declining rapidly and also declining seasonally. Turning to the wheat export sales report, weekly export sales came in at 229,000 tons, and the wheat export sales number, the lowest for this marketing year, now after half of the crop year has gone by. Even though today's sales number at 229,000 tons is close to the 272,000 tons needed weekly to reach USDA's forecast, the general trend in wheat export sales has also been lower, and that's seen as a concern for the wheat market and pushed prices a little bit lower today. Other grain news today, demand has been very good, but the other side of the supply and demand balance sheet is production. Weather around the globe has been, at least for the most part, non-threatening this year. Mostly favorable weather has allowed for record global crop production this year. Corn, soybeans, and wheat production are all estimated to reach all-time record highs. Now, despite the increasing demand that we mentioned just a few moments ago, the estimated record world crops will result in increased ending stocks this year if weather remains favorable. This is the overall theme that we've been discussing for quite some time, and that even though we'll have bounces from time to time in all these markets, corn, beans, and wheat have all seen some bounces, we continue to look at bounces as selling opportunities as long as the big picture continues to point towards increasing global stocks of all grains. We're going to walk through the world corn, beans, and wheat production charts just so we can get a better feel for that record production. Corn production expected to exceed 950 million metric tons. That would be an all-time record by quite a bit for corn. World soybean production expected to exceed the 280 million metric ton range, and again, similar to corn, an all-time record production level by quite a bit. And in wheat, a large increase in production this year is expected to create all-time record production. So we're seeing all-time record production from a global perspective in corn, beans, and wheat. Taking a look at today's March corn chart, corn prices traded an inside day. That means we traded below yesterday's high and above yesterday's low within yesterday's range. The short-term trend for corn is still pointed higher. We find the 10 and 20-day moving averages still providing short-term support for the corn market. This leaves corn, at least for now, in a sideways range with 418 providing chart support and 449 overhead resistance. Today's close at 433, right in the middle of that trading range that's been in place for over a month. We have no change in our attitude towards corn prices today. We still think that corn has an opportunity to possibly push higher towards the 449 level, but long term the trends are still down, and unless South America has weather problems, we still think that new lows could be posted eventually. That's why we continue to look at any rally into the low to mid 440 range as a selling opportunity. We believe that eventually prices could push down towards the $4 level as we move closer to the South American harvest. Turning to the January soybean chart, soybean prices also had an inside trading day, meaning we traded below yesterday's high and above yesterday's low. Overhead resistance remains at the highs posted earlier this week at $13.46, with support coming in around the $13 level where our 40-day moving average may be as low as $12.90, where our uptrending line comes into play. The overhead resistance and the chart support continues to point towards a pennant formation, a narrowing trading range, and really anything in this trading range seems to be fair game in the short term. Our opinion on soybean prices hasn't changed. We can't rule out this market trying to retest the highs at $13.46, but we do believe that $13.46 could very well have been a fairly significant high. We think that this market is likely to turn lower over the next few weeks, initially testing the $12.90 to $13 range. We think that as we move through December and into January, we could retest the $12.47 range. And if weather remains favorable in South America towards their harvest, we would not rule out retesting the $11.69 range as we move closer and closer to the South American harvest. Turning to our Kansas City March wheat chart, wheat prices were in an uptrend, at least a short-term uptrend over the last week, but yesterday's reversal to the downside on the extremely large wheat estimate from Stats Canada and some follow-through to the downside today pushed wheat prices right back to $6.94 for the daily low. That matches the lows posted back in September and also the lows posted earlier in November. We'll have to watch the charts carefully over the next couple of days, but at least for now, the $6.94 support line on the charts has held. Overhead resistance at this time then would initially come in, the highs posted earlier this week at $7.16. Taking a look at wheat prices going forward, we had felt that wheat prices could test that $7.31 overhead resistance level, but yesterday a large production estimate from Stats Canada on the Canadian wheat crop and also a bear in Australia coming up with a larger crop has pushed wheat prices lower the last couple of days. We can't rule out the market pushing below the $6.94 level to see if there's any buying down there, but we're not extremely bearish from this level in the short term. We think that the bulk of trading will be in a sideways range in the short term, but longer term, as we move through the winter and closer to the harvest in South America next spring, we think that at that point, wheat prices could push into new lows. This is Dan Cowger for Heartland Farm Partners. Thanks for joining us and have a good afternoon.